Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So as usual we have prepared the vehicle report today because lots of interesting and important events have happened last week, and I'm speaking not actually about the gross domestic product release or consumption expenditures index. So yes, they need to be commented briefly, but we do not see really big information around them. So you probably could see everything by yourself. It's just inflation is stubborn, even has raised slightly, while the gross domestic product has slowed. It's more interesting to see in details if you will check what particular components of the gross domestic product keep it on surface and what the most negative impact. You could make some conclusions. So that we did in our weekly report. But not this topic has become the major one. We think that there are two major events have happened recently. First one is collapse of the First Republic Bank, and second is announcement of the second term run from the Joe Biden. So if we suggest to keep the latter for tomorrow report on the gold market, because it also make impact on not only on the economical part but on the political, while the former we have discussed in the report. And as you understand, the issue actually not about the First Republic Bank itself. The issue in the global systematic problem in the banking sector. And we have shared with you why we think that this is just the First Republic Bank is just the top of the iceberg, and what the consequences we could get in the nearest term from this banking crisis. Also, why we suggest that this will continue. This the First Republic Bank is not the final one, but it's already the system is already have the big difficulties to carry this burden, because FDIC reserves are not robby. They actually almost exhausted with the Silicon Valley Bank collapse and providing other support to other banks backed by the United States Treasury. So currently it has really big problems what amount of money they will need to save the First Republic Bank as well. They have the 100 billions of treasuries on the balance, but all of them have the negative result. So I mean, they are in loss, so they will have to book loss to get the cash to provide to First Republic Bank. And it's not the fact that $170 billion will be enough to do this, because currently they pumped in approximately 360 billions, and they have actually saved just the Silicon Valley and provided additional help to other banks. But we see that it's not the end of this saga. So we will see definitely the continuation. And by this just analysis of this situation, we're combining everything together with the Fed policy, trying to get the logical forecast for the further Fed steps in terms of the interest rates and in terms of the possible, maybe changing on the vector of the policy. And actually, guys, we are coming to conclusion that most probable scenario that we see is keeping rates high, and even rate change as not only in May but in the June and probably in the July as well. So probably Fed will keep the trend until the August break in the Fed meetings. Just because of the we have shared with the pranked videos of the Jerome Powell when he clearly said that it will be 2 more rate hikes, while markets currently ignores the June, so they think that in June there will not be rate change. But Jerome Powell said in this prank video clearly this will be May and June change. If he are sure with 2 rate change, it means that in July the 50-50 So the rate also might be changing in July as well, depending on the market conditions. Currently, we do not see the big problems, at least in the official statistics. Yes, situation is deteriorating, become worse, but it's not at the edge yet. So they have some safety margin as the Fed, as United States Treasury, to keep the existing policy. Fed still could rise rate 1, 2, maybe 3 times, and hardly we will see big collapse in a job market, for example, or somewhere else. The major reason why we think that the Fed will keep rate change, they need to break market expectations. Because if they will break them, they will grab all liquidity that now stand on the stock market and on the crypto market. And the United States Treasury currently vitally needs this liquidity because they have to finance government spending until the end of the year. They need at least $1.5 trillion, taking in consideration the budget deficit and the trade balance and the current operation negative values. So they need this money. They couldn't print, but this will be more devastating for the economy, for the bond market in particular, if they start printing. And I think that the new QE will be some ultimate, the hope of last resort, something that will be done only if they will not have any other ways to fix this problem. So that's why I think that they will try to crush the markets to grab liquidity with the high interest rates first, and they will not succeed based on statistics, maybe based on some other issues, maybe they will turn to quantitative easing. So that's what about fundamental. Because on the technical side, we just could say only some few things. On the daily charts, nothing actually to comment. Mostly picture stands the same. Formally, these two grabbers have been completed with the spike down because market here has created slightly new low compared to this one, and that's why these two grabbers are done. Well, this grabber is still valid, but most interesting stuff stands on the intraday chart. On the 4-hour time frame chart, market was able to stay inside of the channel. Now we're on a road to very important events: is a Fed meeting and European Central Bank meeting. Different statement could be done, so investors need to wait for the first statement from the Fed, then the European Central Bank compares to them, setting the balance of the euro to USD, and then make the bet. And with this environment, as in general more anticipated, that the European Central Bank will be more hawkish from the statement, has more potential as a rate change. That is major sentiment currently in the market. First, in the beginning of the week, I would focus on the bullish scenario, because despite that market accurately has completed all our targets to the downside. Let's take a look first. 109.80 had been completed, as we said, 127 extension of the butterfly. Then 109.60 has been completed. Then market has shown sharp reversal and formed bullish reversal swing on hourly chart. That's why I would start the week from the reverse hand and shoulder shape, and we'll watch for 109.95, 110 area is two fib levels where potentially the right arm could be formed. So, and if only market will erase the hand and shoulders pattern, start dropping back to the 109.60, that might be signal for taking the short position. Otherwise, I think that bulls could consider these two levels for a possible taking the long position, because if everything goes with the hand shoulders, market should reach at least 110.75 area, which is the ABCD OP target. It will be minimum nearest destination point. But in general, these hand shoulders could put the foundation for the further upward continuation, just because maybe of the more hawkish sheets of European Central Bank statement, or if the Christine Lagarde will change the rate for 0.5%. It's less probable, but still not off the table totally. So let's start from this hand and shoulders Monday, and then see what will happen.